The following program was paid for by Templar Real Estate. The views and opinions expressed on this program are not necessarily those of the staff and management of WMTR. As always, it is advisable to consult a professional before making a major decision. It's time now for the Templar Real Estate Talk Show. Here's your host for the program, Joseph J. Zoppi.
Hi, my name is Joseph J. Zoppi, a real estate investor, consumer advocate, author, and managing partner of Templar Real Estate Enterprises. Today you're listening to the Templar Real Estate Radio Show. You can reach us at templarcashforhouses.com or call us at 973-315-7990. And we could answer any questions you may have, or you could always email us from our website. If you want a topic discussed on our show, we'll do our best to try to get it on the show and answered. My company is a real estate investment firm. We buy houses for cash. We purchase apartment buildings. We do joint ventures with other real estate investors. We loan money for rehabs and provide transactional funding as well. We work with individuals that want to invest with us in single-family houses up to apartment buildings. We do not speculate, and we're very protective of our money and our investors' money. I am not a real estate agent. I have individuals on staff that are agents that will sell your house through the traditional multiple listing services, but we are not a brokerage. The show will go over everything there is about real estate and those things that impact real estate. We'll talk about our rehabs, some of our investments, what we've learned from those investments, what we've learned from our rehabs when they haven't gone as well as they should go. Real estate is the biggest or one of the biggest investments that you have, so it's important that you know as much as possible about it. I'll provide my opinion, and it's only an opinion. I ask everyone always to research everything, even if you have your own attorney or CPA. Always double check or triple check. Today I'll be interviewing Edwin Kelly. Edwin is America's leading expert on self-directed retirement accounts and self-directed investment strategies. He has more than 24 years of experience in the financial industry. He worked for such notable companies as UBS, Vices. Edwin is a founder and currently serves as CEO of Specialized Trust Company. Prior to founding Specialized Trust Company, Edwin helped grow one of the largest self-directed IRA custodians in the industry. Edwin is that avid educator, adding value to clientele by developing significant knowledge assets at every company he has worked with. Edwin has made several special appearances on The Money Show, and his work and ideas have been featured in major national magazines and newspapers throughout the United States. Topics he frequently asks to speak on are: what is the average person? How can they take charge of their finances so they can stop worrying about money and can look forward to a comfortable retirement? Little known investment strategies that have helped people retire sooner than they expected. Completely legal secrets to growing wealth tax-free. He's also a co-author of the best-selling book, Leverage Your IRA. He's currently writing 2 other books. So I'd like to introduce Edwin Kelly. Hello, Edwin. How you doing?
I'm doing great, Joe. How are you doing?
Good. So I'd like to jump right in. Could you tell us a little bit about what is a self-directed IRA?
Yeah, so that's a great question, and it's a great way to start the conversation. Right now, a lot of people hear the term self-directed IRA, and so what a self-directed IRA is, if someone they might have heard the term, it might be a new term for them, but what a self-directed IRA is it's an IRA that is held by a financial institution that allows you, the client, or the IRA owner, right, the retirement account owner, to invest in anything allowed by the law or allowed by the government. So a lot of people think that you're limited to stocks, bonds, mutual funds, and CDs because those are the most common investments held inside of retirement accounts. The reality is that you can invest in all kinds of things in retirement accounts, things like real estate, physical precious metals, cryptocurrencies, private equity, right? I mean, all kinds of things that are allowed to be invested in. And so that when we say the term self-directed IRA, that's what we mean. We mean that you can invest in anything allowed by the government.
Great. Now, so what's the difference between a self-directed and a plain vanilla IRA?
So, you know what? I'm glad you asked that because the funny thing is that if people will ask me oftentimes, they'll say, well, you know, how do I know if I have a self-directed IRA or not? And what I used to tell people is, well, you go back to your financial institution, right? Whoever holds your IRA right now, your retirement account, and you say, hey, I want a self-directed IRA. Is that what I have? Now, the answer that they used to give you would be no, right? But financial institutions, because this is self-directing, people are starting to come and self-direct retirement accounts in droves, right? I mean, the numbers are going up very, very quickly, and it's staggering, actually. But you know, financial institutions have caught on, and so now what happens is if you go to your bank or your brokerage and you say, hey, I want a self-directed IRA, they're going to tell you, great, that's all we offer. So what do they mean by that? When you go to the typical bank or brokerage, and you say they say that they offer you a self-directed IRA, what they mean is that they'll let you choose, okay, any investment on their platform, right? So in other words, stocks, bonds, mutual funds, and CDs. What they mean by self-directed is that you can choose from those four options. Okay, so now we've kind of had to evolve the term, and so now I refer to it as what's called a truly self-directed IRA and plain vanilla IRAs. So a plain vanilla IRA is one that basically limits you, right, as the IRA owner, to stocks, bonds, mutual funds, and CDs. A truly self-directed IRA is one that allows you to invest in virtually anything, right? Anything allowed by the government, like I said earlier. So again, real estate, notes, cryptocurrencies, physical precious metals, you know, all those types of things are things that clients invest in with a self-directed IRA. And just to clarify that point, because sometimes people will say, well, what makes a self-directed IRA versus, say, a plain vanilla IRA? And my answer is this. It's total, well, we do. Okay, right there's the short answer. We do. That's what makes the difference. And what I mean by that is the custodian or the financial institution that holds your retirement account is the one that is allowed to set the rules or the restrictions on what types of investments they're willing to hold. So most people have their retirement accounts at a bank or brokerage. You are not able to self-direct your retirement account the way that we're talking about it at those places. So what you need is a specialized custodian, right, or a specialized financial institution that specializes in allowing you to self-direct your retirement account into investments that, again, are allowed by the government.
Yeah, so no, most definitely. And, you know, that's the thing, you know, you deal with any of these brokerages and they have a certain amount of, you know, between the stocks, the mutual funds, so on and so forth, and that's what you could pick. You can't pick real estate unless it's like a REIT maybe, but you can't do any of that, as well as cryptocurrency unless it's like an EFT or something. But yeah, you know, it provides a lot of flexibility.
Exactly.
Now, I got a question. So how come most people haven't heard about this?
Well, you know, it goes back to what I said earlier. So it's interesting because when the government wrote the rules, right, in terms of retirement accounts, and they've been around a long time, since basically 1974, as we know retirement accounts today, one of the things that they said is that firms are allowed to place restrictions on the investments that they hold. And so what Wall Street figured out was, you know, you could make a lot of money offering retirement accounts if you kept people in a very tight box and on the platform, which is why people think oftentimes, you know, the misconception is that you can only invest in stocks, bonds, and mutual funds and in an IRA. And so the Wall Street has done a great job. The traditional financial institutions have done a phenomenal job at hijacking the conversation. So if you were to go to your bank that you hold your retirement account at, or the big Wall Street firm that you have your retirement account with, and say, hey, I want to buy a piece of real estate in my retirement account. Even which most people aren't even aware that you can do that, because again, they don't talk about it. But if you became aware of it, because maybe you listen to this radio program, and you go back to your bank or your brokerage and you say, hey, I want to buy, and this is a question I tell you to ask people, your financial institution. This is how you can actually tell if you have a truly self-directed retirement account or not. You go back to whoever holds your retirement account right now, and here's the question you ask them. You say, hey, there's a property at the end of my street for sale. I want to buy it in my retirement account, and I want to have it rented out to a tenant, and the tenant's going to write a check back to my IRA. Will you allow me to do that transaction or investment inside my retirement account with you? Now, if you go to your bank or your brokerage, they're going to say, no way, you can't do that.
Yeah, exactly.
Right? If you came to a company like ours, the answer is yes. That's what our clients do every day. Right? That's what we mean by self-directed. The reality, though, is that the big banks and brokerage firms make a lot of money holding assets in their mutual funds, so they don't want people to know about it, so they don't tell people that you can do this. And to the degree that if you call them and ask them if you can do this, they'll typically tell you, no, you can't. And what they mean is, no, you can't do it with them, right? But they don't get that specific. They just say, no, you can't do that inside of an IRA. Well, you can't do it with them. That's a true statement. But you are permitted to do it.
Right.
Now, are there rules around what you're allowed to do and what you're not allowed to do?
Yeah, so, one of the things to be aware of is that, there are some rules and restrictions around what we can and cannot do, right? Now, when the government wrote the rule book, this is kind of interesting. They don't tell us what we can do, and the reason why I say that is because the government doesn't like to take responsibility, right? So if they told us we could do something and we went out and did it and it didn't work, we might blame the government for that, right? So instead of telling us what we can do, they tell us what we cannot do. And they refer to these in the code as prohibited transactions. Now, I don't want to get too technical here, but just so people are familiar with the term, prohibited transactions, those are the don'ts, right? And there's effectively a few things that they say we cannot do, okay, just to make it simple. The first thing that we can't do is buy collectibles or invest in collectibles inside of our retirement account. So what are collectibles? Things like rugs, antiques, gems, stamps, coins. Of course, the government made an exception for the coins, by the way. They said you can't buy coins in your IRA unless, of course, you buy them from us. Then we'll make an exception for you, right? Well, that was big of the government. So that's number one. You can't buy, collectibles, okay? Second thing is we can't buy life insurance inside of our IRA. Now, life insurance is good to have, right? I have it. You should have it. We just can't buy it inside of our retirement account. So that was the second thing that they prohibited. Third thing they prohibited was they said you can't do any self-dealing type of transactions. What is self-dealing? You know what? I'm not going to get into a lot of detail on that today, but here's what self-dealing is in a nutshell. Self-dealing is if you own something already, personally, and you say, you know what, I own this investment, and it makes me a lot of money, and I don't want to pay tax on it, so I just want to put it in my IRA, so I don't have to pay taxes anymore. Right? That's self-dealing. So what I tell people is that one of the ways to stay clean with the self-dealing rules is simply to look at it that when you have your self-directed IRA set up, once you get it set up and you've got some money in there to invest, every new investment that you don't own already is probably a viable transaction for your retirement account. So, no money, no account, no opportunity. Anything you own already is off the table. But once you get that account set up and you got some money in the account, anything new you're looking at could very well be a very viable investment for your self-directed retirement account.
Right. And, you could always also Google all this information, and you could get a lot of it in terms of who you can invest with and who you can't from a self-dealing perspective. So
yeah, and we have a lot of resources and information, education, training that we do for clients and on our website. I mean, yeah, there's a variety of resources out there. Here's what I'll say too, is that it's not overly complicated. It really isn't. It just requires, it's just new to people, and so it just takes a little bit of familiarity to gain. And once people start self-directing their retirement account, they find out, it's really not all that complicated. You just got to know a few basic rules and regs, and people are off and running.
Right. What are some of the things that you see people invest in?
So, it's interesting. It really runs the gambit. You'd be amazed. I'm always amazed at how creative people can be when it comes to these things, which is really one of the things that I love about being in the business. And so, I'll say that probably the main thing that we see clients invest in is real estate. That's probably the number one category that we see clients investing in. Real estate investors, and when I say real estate, that can look like a lot of different things, but I'll give you a couple of examples. We have clients who, buy and hold properties for income inside their retirement account. So, they own a physical single-family home that's rented out, right? Or I have one client who owns 6 single-family homes, as an example, in his IRA, and that rental income is basically his retirement income, right? So he created his own kind of personal pension, if you will, using a self-directed retirement account along with the real estate that spins off monthly income to him. So that's, so that's one example of something that people invest in. We see, people investing in physical precious metals is a big category. There's things new on the horizon, like the cryptocurrencies. We see, more and more people talking about and buying into and investing in cryptocurrencies within the self-directed retirement accounts. Note investing is really significant. Another one that I see a lot of is private equity deals, and that's one of the things that I think is really interesting too, because if it's a startup company or a small business that needs capital, one of the challenges is that, right, they don't have access to the capital markets like the big companies do. But with self-directed retirement account, right, you can go out and raise private money, as we call it, private money, right, from other people's retirement accounts. If you have your own IRA or retirement account and a small business. In fact, let me give you a quick example. I had a client who was really into martial arts, and he and his whole family went and studied martial arts at this particular dojo. And apparently the gentleman who taught was really, really good, and he had this unique way of teaching things. And he had a couple of schools that were doing very well, and he wanted to expand his business. The problem was he didn't have the capital to do it. So my client basically took his retirement account and invested in opening up another location, right, a third location for this particular martial arts school. And his retirement account owned an interest in that location and in that business, and received a portion of those profits back to his retirement account.
Right.
So things like that.
And that's the thing, is that it has to go back into the retirement account. It can't just go into the person's pocket.
Yeah, and that's one of the basic rules. I mean, like I said, the rules aren't overly complicated, but you know what? If the retirement account owns the investment, all income, profits, earnings return to the retirement account. Right? And that's basically how it works. Sure. That's also what gives us the tax protection inside of a retirement account.
Right. Yeah. And we have a number of private investors, and that's what they do with us. And we've been using your company now for like 2 years now, and we've had a lot of happy clients, and because of that. Can business owners and entrepreneurs benefit from self-directed IRAs?
Yeah, there's a lot of different ways that in fact, it's interesting because when I think about self-directing, and I work with clients on a one-on-one basis, being CEO of a specialized trust company keeps me pretty busy. But one of the things that I really enjoy doing is working with clients on a very close personal basis. And so I work with a handful of clients throughout the year on a one-on-one basis. And when I work with clients, I look at them as an individual, right? I look at their business. Many of them are entrepreneurs or full-time investors. and their family. And so, there's ways to dial in self-directing and self-directing strategies in each of those areas to maximize what you're trying to accomplish. And so from a business owner standpoint or an entrepreneur standpoint, there's a couple of different ways people can use self-directed retirement accounts. The first is, like I said, has nothing to do with their own retirement account. It has to do with if you're looking to raise capital for your business or investments that you're putting together, you can raise money from other people's retirement accounts to fund those deals, right? It becomes a source of funding. There's over $25 trillion in retirement accounts right now. So there's a lot of capital there. And people are always looking for ways to diversify their retirement accounts, which is why self-directing, one of the reasons why self-directing has really taken off in the last 5 years. And there's a lot of interest in that. Another way that entrepreneurs and business owners can take advantage of self-directed retirement accounts is that they can set up a small business retirement plan. Things like solo 401ks, Roth 401ks, SEPs, Simples, all those plans can be self-directed, and what that enables the business owner or the entrepreneur to do is to put more money away, take more money off the table from taxes, and with that self-directed account, invest in the type of assets we're talking about. Third and final way, I'll say this, that entrepreneurs and business owners can leverage self-directing and self-directed retirement accounts is that my grandfather is a great example of this. My grandfather owned an insurance agency and did very well when he was working. And he had a brokerage account set up, and he put some money in with a financial advisor because he was doing pretty well in his insurance business. He had plenty of cash flow, and he would make money in the stock market, and then the stock market would take it away. And then he'd make some money back, and then they would take it away, right? And after going through a lifetime of cycles like that, he says, you know what, the stock market doesn't work. I don't want any of these types of accounts. I don't want any of this stuff. And he just got rid of it all. Well, fast forward, right? He retires from his business and sells it off, and he lives 30 years in retirement, and now he's run out of money and he's living off Social Security. And it's unfortunate, but it's a common story. But what he always said was the reason why he got rid of the retirement accounts, he says, I couldn't make any money in the stock market. All my money I could make in business. Well, for entrepreneurs and investors, right, and business owners, the cool thing about it is that you can invest creatively with the self-directed retirement account and invest in the things you know. You're not limited to the stock market. If he would have known about self-directed retirement accounts, he could have invested in the things that he enjoyed investing in, real estate, small businesses, those types of things. He could have done all those things inside of a self-directed retirement account, and he could have preserved his wealth when he wasn't working through his retirement years. And so those are some of the things that I think that entrepreneurs and business owners can come and take a look at from a self-directing standpoint.
Sure. Now, how much money do you need for a self-directed IRA?
You know what? It's interesting because people will say, yeah, how much is enough, or how much do you really need to self-direct? And I say, well, it really depends on what you're going to do. It depends on, really your creativity, what you want to do, those types of things. But I've seen clients start with as little as $500 and invest, and I've seen, clients start with a lot more, right? What I will say is this: the more money you have, the more options you have. Having said that, there's options every dollar amount. So as an example, somebody might say, well, how in the world can you invest $500? Well, I have clients who will, quote, wholesale real estate in a Roth self-directed retirement account, say with $500. So if people are wholesaling, it's a simple, strategy where you have a contract that controls an underlying asset, right? I'm using the example of real estate, and because they're not actually closing on the property, they can assign that contract, which gives somebody the right to buy that property at a specific price for a specific period of time. And they can assign that contract to someone else. And so, what I will say is that I have seen people wholesale a property or assign a contract through their retirement account and book, anywhere from $2,000 profit to north of $10,000 profit. And typically the amount of money that I see people using in a wholesale transaction or in a contract assignment type of situation is about $100. So with $500, somebody can get started investing and start growing their retirement account. And I've seen that happen time and time again.
Sure.
But like I said, the more money somebody has, the more options they have, for sure.
Yeah, definitely. Now, last question. How is someone's money protected in an IRA?
Yeah, you know what? I think that's a really important question, because people will often say, well, wait a minute. Why can't I self-direct my retirement account with the bank that I've been doing business with for the last, however many years? Or my financial institution that I've been dealing with for the last, so many years, who is well known, a big national or international company. Well, they don't allow us to self-direct. So when you start to say, hey, I want to self-direct, the companies that hold self-directed accounts and actually allow clients to do this, they may be a name that somebody's not familiar with. So one of the questions that comes up is, or should come up is, well, how do I know my money is safe? How is it protected? And those are really good questions. And the answer is that for us to be in this business, as an example, I'll use specialized trust company as an example, we have to be licensed, insured, and bonded. We are regulated the same way that any other financial institution that does our type of business is regulated. So, there's oversight, there's audits, there's examinations, right? There's requirements capital requirements that have to be met, all these types of things. But here's, when I think of protection, the absolute best protection, in my opinion, that we can achieve as investors or retirement account owners is to know exactly what our money is invested in. When I ask people, like, if you own a mutual fund, what stocks does it hold? Can you even tell me what the top 5 are? Right. I never can come across one person who actually knows what their money is invested in. Like, people don't have an idea. But when I talk to our clients who self-directed retirement accounts, they know exactly what their money's in. And if it's invested in, I'll use the example of the one client who owns 6 rental properties in his retirement account. Those rental properties are the best protection he has, right? Because he has that physical, real property that his retirement account owns, right? Nobody can run away with that. If it burns to the ground, it's insured, so it actually gets rebuilt, and it's probably worth more than it was before it burned to the ground, right? I mean, that's protection.
No, definitely.
And so,
definitely.
So that's one reason why people love to invest in real estate and do it through a self-directed retirement account, because of all the asset protection and tax benefits they get.
Yeah, you're absolutely right. Edwin, thank you very much for the call. We'll be circling back because I will be having a presentation at a hotel in the Parsippany area in the coming month or so, and someone from Edwin's staff is going to be there to continue to go over some of these questions, and we can have a sit-down roundtable discussion on it. Again, Edwin, thank you very much for your time, and I appreciate everything you've given us.
Thank you so much. I appreciate it.
Okay, take care, Edwin. Bye.
You too.
Again, thank you very much for listening today. You could reach us at TemplarCashForHouses.com, or you could call us at 973-315-7990. You give us a call. We can discuss any issues that you're having with real estate, and we could help you, whether it's buying your house, investment in property. The event that we're going to have coming up with Edwin's team, I think is going to be very enlightening, and I think you could learn a lot from it. You'll be hearing that in future broadcasts when we're going to have that. Again, thank you very much. This is Joseph J. Zoppi.
Life can be a roller coaster, and sometimes you need to sell your house fast. That's why there's TemplarBuysHouses.com. Maybe you're downsizing, getting a divorce, having health or financial issues. If so, head to TemplarBuysHouses.com. TEMPLAR BuysHouses.com. TemplarBuysHouses.com will buy your house quickly and without hassle. If you've inherited a house that is vacant, contact TemplarBuysHouses.com. Dealing with them is easy and quick. No high-pressure sales tactics, and you won't have to fix up the house. They will buy your house as is. You pick the closing date and when you move out. No commissions and no hassles. Contact TemplarBuysHouses.com. TEMPLAR BuysHouses.com. With an A rating from the Better Business Bureau. Call 973-315-7990. That's 973-315-7990.
Be sure to tune in every Saturday at 10 a.m. for the Templar Real Estate Talk Show. Get informed and have your questions answered on AM 1250 WMTR.
The preceding program was paid for by Templar Real Estate. The views and opinions expressed are not necessarily those of the staff and management of WMTR. As always, it is advisable to consult a professional before making a major decision.
Broadcasting live from the Hilltop Nissan Studios. Hilltop Nissan, Route 10 East Hanover, and HilltopNissan.com. This is Classic Oldies WMTR.
The following program was paid for by Templar Real Estate. The views and opinions expressed on this program are not necessarily those of the staff and management of WMTR. As always, it is advisable to consult a professional before making a major decision. It's time now for the Templar Real Estate Talk Show. Here's your host for the program, Joseph J. Zoppi.
Hi, I'm Joseph J. Zoppi, a real estate investor, consumer advocate, author, managing partner of Templar Real Estate Enterprises. You could reach us at TemplarCashForHouses.com or call us at 973-315-7990. And we could answer any questions you may have, or you could email us from our website. If you want to have a topic answered on our air, we'll try our best to answer it, and you could just send that to us as well. My company is a real estate investment firm. We buy houses for cash. We purchase apartments. We do joint ventures with real estate investors. We loan money for rehabs and provide transactional or gap funding. We work with individuals that want to invest with us in single-family houses up to apartment buildings. We're constantly looking for additional houses to purchase as well as apartment buildings. For apartment buildings, we're looking at usually anything. We prefer around 50-plus units, but we'll do units from 10 on up. So if anybody out there has any apartment buildings or interested in selling, please contact us. Another thing is we do not speculate. We're very protective of our money as well as our investors' money. I'm not a real estate agent. I have individuals on staff that are agents that could sell your house through the traditional multiple listing service. But again, we're not a brokerage. The show will continue to go over everything that deals with real estate and how it impacts your financial future. Real estate is one of the biggest investments anyone has, so the more you know about it, the better it is. Also, I'm going to be providing my opinion. It's only my opinion. I ask everyone to do research all the time. Everything that you do, please research. If it's everything from your own attorney to a CPA, always double or triple check. Last week we had a guest on the show, Edwin Kelly. He was talking about investing using your IRA to invest in real estate or other business ventures. We'll be having an event on Sunday, late February, early March. We should know by the next week when it will be. And it'll go over in more detail in the Parsippany region about investing your IRA in different types of business ventures. Specifically more towards real estate, and that's what we do. So we have a lot of private investors that come to us and they use their IRA to invest in real estate. We believe that, real estate is one of the safer, not the safest, but one of the safer ways of investing your money. Right now, the real estate, the stock market continues to move up, and eventually it's going to top out. The question is when is that going to happen? So real estate, it's always going to be there. You might take a little bit of a hit from a valuation perspective, but the way we invest, you'll continue to have monthly returns as a result of the way we do it. There also will be a lunch and learn in the coming month for real estate agents and different potential ways that they could make additional money, not just through selling of the houses. So that's going to be very exciting. So we should be doing that again, probably the end of February, early March. One of the things that I constantly talk about is when someone reads something, they take it as gospel. So that's why I'm always talking about looking up the information, getting a balanced approach to what it is. Sometimes you might look at a very liberal set of ads or commentary, but I would request you should look at the other side also, so you could balance it out and see. Each one has their own good points, but unless you get a full picture of it, you might not really get the accurate depiction of what's going on. Case in point, I was just reading something the other day about an economist from MIT that said that, I guess in 2016, once Trump gets elected, the world economy is going to go down. And so this is a MIT economist, and he was saying that the economy was going to go down. Well, the economy hasn't gone down. The world economy hasn't gone down. So, again, we must kind of balance what's being said and understand that, unfortunately, in this environment, everything's politicized, whether it's, you're on one side or the other side. I think what really, was really clear to me after not trusting a lot of things on shows is there was it was for the Weather Channel. So there was a hurricane coming, but it really wasn't that bad at that point. And the gentleman announcing on the Weather Channel, he was like, it looked like he was on a 45-degree angle because of the wind was blowing. But when they were taping it, somebody was walking behind him, and they were just walking casually. So we see that it wasn't real, it was fake. So I think that really says it. If even the Weather Channel is not accurate in everything they're announcing, that says it all. So it's not really about politics only. It's just it's about gathering headlines and putting on a narrative of whatever that may be, whether it's weather or politics. So I always say, make sure you look it up, make sure you research it really clearly. So over the past few weeks, I've talked about different things you need to look at when you use a cash buyer. Cash buyer is just like our company, where we purchase houses for cash. So some of the things I already went over was how long a business is in existence, being part of the BBB, the Better Business Bureau, signing a contract, and signing a contract is where you sign a contract and then that contract is given to someone else to fulfill. And we normally do not do that at all. Also, in terms of signing a contract immediately. Someone puts a contract in front of you, they say you have to sign. Do not do that. Make sure you send it to your attorney. Next one was proof of funds, where you substantiate, or the buyer should be able to substantiate that they have money. If they're buying it for cash, they should have it, or they should have a line of credit. Next one we said was a place of business. So if someone's going to purchase your home and they say they're in the business of purchasing homes, they should have a place of business, whether it's an office building, a house, but you should know where their place of business is. Next thing we'll go over today is about their website. So nowadays, everyone should be having a website. So I think it tells a lot about a business. You could look at the website and you should see their phone number. You see their business address and some additional things about them. One of the things that I've seen on competitors' websites is where they have only 2 pages. One is basically, we want to buy your house for cash, and the second one was basically to fill out a form. Or maybe it's on the same page. But I think, it gives insight of how the company is. So you want to see different things in there. And maybe they have blogs. Maybe they have testimonials. We have lots of testimonials on our website. But you need something to really understand what's going on and who this business is. Another thing that I've seen on my competitors' websites where you'll see, it might say, as seen on NBC or Wall Street Journal, so on and so forth. So if they're saying that, that means they should have been publicized and they should have had an article or something written about them on these different media outlets, whether MSNBC, Wall Street Journal, so on and so forth. Well, a lot of times, if you do the research, you realize that they're just icons or, pictures that are put on the website, but there's nothing behind it in terms of being real. So that gives you a lot of insight into the type of business it is. Because if they're publicizing it, it should be true. So that's, something that you have to look at very carefully, and it's very easy now with the internet to find all these things. Another thing that I've seen competitors do that state that there's no township certificate of occupancy required. They don't need to apply for that. Well, all townships require that you get some type of CO, which is certificate of occupancy, or CCO, which is certificate of compliancy, but all townships require it. If someone's telling you that's not the case, either they don't know or it's a downright lie. It's one or the other. And they require that for many reasons. One of them specifically is to ensure that the house that's being purchased, even if it's by an investor, they understand what's in the house in terms of, is it habitable? Is it not habitable? The other thing they require is, all of them require a fire inspection, so that there is fire detectors up there, smoke detectors, carbon monoxide detectors. That's always required. And anyone that says that's not the case, that is wrong. Certain townships will fine you as well as the person buying it if you do not get a CO or a temp CO. So for Newark, you could be fined $5,000 and the person buying it could be fined $5,000. In East Orange, it's approximately $3,000 for the buyer and the seller. So it doesn't matter whether they said you don't need to do it, you have to do it. And in terms of the different types of CO, like I said, you could get a temp CO. So if the house is, we'll say, uninhabitable or there needs a lot of work, most townships will give out what's called a temp CO. So a temp CO says basically, okay, it's not habitable, but eventually it will be, and the person that buys it is responsible to fix it up. And then that's okay. And a lot of times when we buy a house, we'll buy it with the temp CO, and we'll put the temp CO on it. And that's fine. And then in 60 to 90 days, the township will come out again, take a look and see if we need some additional time to fix everything that's necessary. But all townships do require it. So if you see something that says otherwise, run the other way. You could also very easily call the township up, and they will tell you what it is. Now, certain COs, when they go through it, certain townships require certain things to be corrected. And, sometimes if you're just selling also retail to another person that's buying it, you might have to fix certain things. Case in point, like a township like Ewing, which is down near Trenton, they require that you fix the sidewalk. So if there's any sidewalks where it's lifted up, you need to fix that. Each township is different in terms of what they want and what they don't want. Edison, for example, when we went there and purchased the house, they were saying basically that they don't even issue temp COs always, and they have to go through a process, which concerned us a little bit. But we were able to get it approved for a temp CO, but most towns will just say, okay, you could get a temp CO. whereas Edison was saying, well, we have to look into it and determine whether we're going to give you a temp CO. If not, you're going to have to fix everything beforehand. So there was some anxiety with that when we were purchasing one of our houses. Another one is like New Milford. So New Milford is another township. Their requirements also looked at whether you had a sidewalk, there was any issues with it. They were always very concerned about the driveway and the ramp, which is the apron going into the driveway. So they were always concerned about that, as well as their fire inspection. Usually with the fire inspection, what the standard is that you should have a smoke detector on every floor. And depending on the situation, you're going to also need carbon monoxide, especially near the bedrooms. And they also usually require a fire extinguisher within or very close to the kitchen, right near the kitchen. That's usually it. Now, certain townships will say you have to have it mounted on the wall, and that's the majority of them. But we've encountered some that said, well, you don't have to have it mounted on the wall. You just have to have it on the counter for the inspection, because we know it's going to be taken off the wall because it's just an eyesore. So it really depends on the township that you're working with and your house is in. Next thing I'm going to talk about is curb appeal. So when we purchase a house, and also when we were assistant sellers in selling a house, curb appeal is very, very big. We have a couple of things that are very big. Location is obviously very big. The second one is curb appeal. So I'm going to go over a few things in terms of what we do to brighten up the house and make sure that when someone drives by, they want to come in. And if it doesn't have curb appeal, if you can't get them through the door, that's a major problem. So the first thing is the lawns. The lawns should be as manicured as best as possible. You should use like an edger to make it like clean and everything in its place. The other one is bushes. So a lot of times what we do is we rip out the old bushes. New bushes at Home Depot are very, very inexpensive. So we usually replace all the bushes that are around the house, and it might cost you a couple $100. The biggest thing is just pulling them out. And most of that, depending on the situation, can be done yourself. So what was an interesting story is a lot of times when we buy these bushes, we also buy this it's like a grass. It's a big grass bush. And, we do that a lot for all of our houses. So one of our contractors, he's from Uruguay, and we install it, and he starts laughing at us. And I said, well, what's so funny about this? He says, well, we usually use those just for like the horses to lay on. We never do it to use it to plant around the house to make it look nice. So it was kind of funny that they, what one person uses or one country uses for one thing, and another one uses for something else. The next thing is mulch. We're very big on, using the mulch. It just brightens up, makes everything a lot cleaner, especially around the bushes. What we recommend is, and again, this is just a preference of ours, is the black mulch. So the black mulch, it makes, between the grass being green and then the black mulch, it makes everything pop. So it makes it very inviting. The stairways and the walkways, should be cleaned and power washed. We always do that, and, fix up any areas that are raised a little bit, patch them up. The next thing is the driveway. So what we recommend with the driveway is at least to put some tar down, and you can sealant for the driveway. That'll also brighten it up because, again, you're going to have that black, and that color just makes things pop. So we're very much into the black mulch, the black driveway, where it's brand new, it looks brand new. Obviously, you cannot seal the driveway if it's really in bad shape. I've tried doing that a few times, and it looks probably worse than previous. But I would highly recommend you sealing the driveway, and it'll look good, and it'll look very fresh. Next thing is the screens on the house. If they're old and beat up, just take them off for the time being and just put them aside. You don't want ripped screens. It just, especially old ones, it just, even if they're old, it just doesn't look good. And clean the windows. The other thing has to do with the doors and the shutters. So if you got shutters, what we recommend, a lot of times what we do is we paint them black, and we paint the door black. So again, what you're doing is just making the other colors around the house pop because of that black. So you'll see the black mulch with us, you'll have the green bushes, and then you'll have the front door, which is normally black, and also the shutters. And as a result of that, it'll really pop. Sometimes we go with a different color. So we did a house on 28 Perry Drive in Ewing, and that one we went with like a blue gray color. And it looked good, but as time progressed, we started using black more and more. We had a house on 24 Weldon Road in Edison. And if you look on Zillow, you'll see it's a very simple house. It's a small ranch, but we just painted a few things on it, and we put a new driveway in, but you could just see the difference with just the contrast between those colors, with the white and the black. And that's important, just to look at the contrast in colors. We had done a nice house. It was a row house in Dover. It was 10 Baker Street. So what we did is we're looking at it, and the house next to me was a very bright yellow. It's just not appealing. I'm like, okay, what are we going to do here? And then there was one next door. It was like a beige. So we were trying to figure out what color to do. We were looking at grays. So we said, well, let's go with a dark blue. And it contrasts really nicely with the house that was next door, which was a yellow. And then we highlighted everything with white. So again, sometimes what we do is we might put a color on, and we're like, afterwards, like, holy mackerel, that didn't look good. So, make sure you get a couple of samples, test it out, because what you see and when it goes on and it starts to dry are two different things. And that's very, very important. I've painted things rooms before, and said, okay, let's just do this real quick. And then all of a sudden I'm like, holy, we got to change this color. So I highly recommend using paint samples and try to offset and try to contrast as much as possible. Well, I'd like to close this segment out, and I'll be back shortly with our next segment. Thank you very much.
Life can be a roller coaster, and sometimes you need to sell your house fast. That's why there's TemplarBuysHouses.com. Maybe you're downsizing, getting a divorce, having health or financial issues. If so, head to TemplarBuysHouses.com. TemplarBuysHouses.com. TemplarBuysHouses.com will buy your house quickly and without hassle. If you've inherited a house that is vacant, contact TemplarBuysHouses.com. Dealing with them is easy and quick. No high-pressure sales tactics, and you won't have to fix up the house. They will buy your house as is. You pick the closing date and when you move out. No commissions and no hassles. Contact TemplarBuysHouses.com. TemplarBuysHouses.com. With an A rating from the Better Business Bureau. Call 973-315-7990. That's 973-315-7990.
Be sure to tune in every Saturday at 10 a.m. for the Templar Real Estate Talk Show. Get informed and have your questions answered on AM 1250 WMTR.
Hello, welcome back. This is Joseph J. Zoppi. from Templar Real Estate Enterprises. Again, I want to tell you that we're going to be having an event coming up at the end of next month, February or early March, about investing using your IRA to invest in different types of ventures, whether it's real estate or any other business venture you may know of. Again, what we're investing in for the most part from a real estate perspective is either single-family houses or apartment buildings. So there's a lot of different options with that, and we could go over that at the event. It'll be in the Parsippany area, and it'll probably be on a Sunday, but I should have the date probably next week sometime, so our next airing, I'll go over that. So I'm going to talk a little bit about, again, we're very big on the rentals, and we're very bullish on it. What we do from a sweet spot perspective is we like rentals below 2,000, preferably around 1,300, 1,400, maybe 1,500, somewhere around there. That's affordable to most people. We're not into the luxury type of real estate. I do not like that at all. I don't care that the numbers are great. I don't care about the rate of return. We don't care about that. Because once we do have a downturn, the ones that get hit first are the more expensive rentals or houses or whatever the case may be. And then it trickles down from there. But on those, the lower end type houses in decent neighborhoods are always going to be around. There's always going to be able to be people that are going to rent those houses. So I think that's very important when you're looking at it from a strategic perspective and an investment perspective. We'll go over rate of returns there. We'll go through a lot of different things, why we think it's good, why we're concerned about the stock market even though it continues to move up. You could be up on the stock market, over the course of 4 or 5 years, 70%, and it'll take only a 20% hit. The stock market comes down 20%, and he'll erase 50% of your gains. If you diversify or, move a lot of your money into the real estate, you have a hard asset there that's going to be around for a long time. So I'd like to, again, you could reach us at our website, Templar Buys Houses for Cash. You could call us and we'll answer any questions you may have. You could leave any type of notes via the website, and anything you want to talk about in future episodes, we'll be more than happy to answer. Well, again, thank you very much. And this is, again, Joseph J. Zoppi with Templar Real Estate Enterprises.
Life can be a roller coaster, and sometimes you need to sell your house fast. That's why there's TemplarBuysHouses.com. Maybe you're downsizing, getting a divorce, having health or financial issues. If so, head to TemplarBuysHouses.com. TEMPLAR BuysHouses.com. TemplarBuysHouses.com will buy your house quickly and without hassle. If you've inherited a house that is vacant, contact TemplarBuysHouses.com. Dealing with them is easy and quick. No high-pressure sales tactics, and you won't have to fix up the house. They will buy your house as is. You pick the closing date and when you move out. No commissions and no hassles. Contact TemplarBuysHouses.com. TEMPLAR BuysHouses.com with an A rating from the Better Business Bureau. Call 973-315-7990. That's 973-315-7990.
Be sure to tune in every Saturday at 10 a.m. for the Templar Real Estate Talk Show. Get informed and have your questions